Hello, I'm Rob Dwyer, Latin America editor of Euromoney magazine in Sao Paulo. Joining me now is Jose Obregon, Senior General Director for International Business and Corporate Governance at Banreservas. Jose, thanks very much for being here and congratulations on your award for Best Bank in the Dominican Republic.
Good morning. Thank you very much, Rob, and good to see you again.
You too. Just thanks for your time today. I just wanted to ask a couple of questions. Firstly, it was obviously an incredibly difficult year for Banreservas and the Dominican Republic. Can you just tell us a little bit about the challenges of growing your loan book and, as a state-owned bank, playing a role in supporting the economy during the pandemic, while also keeping NPLs in check?
Very well. Very good question. Undoubtedly, Rob, last year was a very challenging year in all aspects, and economies and banking system were definitely challenged as well. No system was really expecting this to happen, but nevertheless, as I mentioned in a prior conversation, thinking outside of the box in terms of managing our business and our loan portfolio was a solution or that it helped Banreservas to position itself as the leader of the banking system in the Dominican Republic. As you know, as a state-owned bank, we do play an important role in the economy, and the bank did rise to the challenge, like in other occasions, in order to support the business side and support the customers. Since very early on the pandemic, the bank established an emergency committee that was working openly all the time, forever, with the executive teams, and all issues from the contingency plans up to how the bank would operate were handled on a day-to-day basis with these teams. The bank, as you know, as a state-owned, plays many have to take many important decisions regarding how to serve the customers. First of all, we have a reduced schedule for all our staffings. We have reduced schedules for our customer care units, and we have to attend our customers. So we did migrate as quickly as possible to call centers for the banks in order to attend those needs. We took several steps that were required in order to attend these needs. On the consumer side, for example, we have several decisions that were made and policies, like, for example, reducing the interest rate of credit cards to 1% a month, meaning 12% a year, which is very high, lowest ever in the country, and that was done for 3 months. This was not mandated by regulators and anybody else. This was steps taken by the bank itself. The bank spearheaded those efforts, and then the rest of the banking system followed with similar policies. We also reduced the payment requirements for 3 months for our customers. We eliminated the late charges fees for credit cards. We added 7 days to granted the deadline for the credit card payments. We eliminated cash advances fees, and also fees for replacement of credit cards. With regards to customers, we served over 1 million clients during the crisis from March to June, and we issue close to $135 million in loans granted during the pandemic, and we also did have an increase in deposits from the bank by 252 million during those 3 months. As you know, 75% of Banreservas physical branches were open, to the customers in order to allow this to happen. No? With regards to the clients and increasing our loan portfolio and addressing the NPLs, the bank, as the rest of the banking system, entered into a regulation issued by the monetary authority to grant a 3-month period, a grace period to all the clients, especially in the consumer side and in the medium size and the small businesses. Banreservas, 92% of our clients were granted that grace period. During that time, it was a challenge to all the banks in order to adjust our core banking system to do this. A lot of communication had to happen in order for the customer to understand what it means. It wasn't a forgiveness. It was just a grace period where those 3-month installments of the payments, both interest and equity, were sent to the last to the last part of the loans, or prorated among the maturity period of these loans. No. Nevertheless, as you know, we as a state-owned bank, we have a change in administration in August. The new administration started managing the bank in August 16th, and the new government also as well, among the plans for sparking the economy and going into support of that, spearheaded a lot of programs that Banreservas developed with the governments. No, for example, we added fairs for small and medium-sized businesses. We continue with our housing fair. We did the automobile fair that we do during the years. We also had special programs for the hotel industry and the tour operators. Only Banreservas did that. We granted special facilities for restaurants and small businesses that support the tourism area, and so other industries as well as the consumer lending on that side. Fortunately for us, we were under a low interest rate environment given by the increase of monetary stimulus given, as well as financial stimulus, and that permitted us to lower the rate for our customers, enter into refinancing agreements to those clients that we have given grace periods. And with regards to understanding their behavior with regard to repayments, we had a good advantage. Now, Banreservas was the institution used by the government in order to implement the help to the people that were losing their jobs, and the help to the society with the programs that the government implemented. We have a payroll incremental of 1.3 million clients receiving help from the government, economic helps. And we, on a speed time, we created a system that people were allowed to receive those funds. Some customers were not part of Banreservas customer, so we have to add it into our customer base, giving us an opportunity, something that I will explain you later, which is a bancarization program. And that allowed us to understand the behavior of our customer. For example, when a client of ours that currently have a car loans or a mortgage loan or consumer loan with us, and we saw that client that came into one of those help programs for the government, it allowed us to do data analytics to match these loans, facilities, liability with these clients, understanding that this client is now losing the job but is receiving help from the government. And that way we could actually predict or manage our probability of default and predict the behavior of that client. The same happened when we saw that customer coming out of the program, that he took a job. We cross reference databases with that PATI program and the other programs that we have, as well with the databases from the pension funds that we do manage over here. So that allowed us to classify our customer on a different manner. So the system were tested in terms of ratings. Credit score system did not work anymore. They were based in the past, not in the future. Things are different now. At that time, were really challenges. No, we have to really, as I say, think upside down. A different way to look at this. We have a great team of data analytics that was incremented and increased, and the using of data for us was very important in order for us to make this happen. No, that resulted in an increase of our loan portfolio during the pandemic. The only bank we increased our loan portfolio around 11% on a 12-month basis from August to August. We increased our consumer lending as well, and our housing, our mortgage portfolio, and our non-performing loans remain at a normal levels. At levels, we saw some deterioration at the beginning, around 30 to 40 basis points. We saw a height of 2%, but then as we started to grow our loan portfolio and customer, we started to refinance, we started to see that level of NPLs to actually come down to historical levels. As of today, we are now, our non-performing loans for the bank is around 1.45%, and for the whole portfolio, it's a very good quality. For that, it's below our historical NPL ratios, and as well, we were very prudent in terms of managing the type of loans that we were placing, and increasing our loan loss provisions. No, as of today, we have almost 5 times the coverage of NPLs. It is on a historic level. The bank did benefited from this part as it grew its loan portfolio and it entered a low interest rate environment. The net interest margin for the bank increased. We had a substantial portfolio of investments that also benefited from that in terms of carry, and impacted very highly our net interest margin. Despite increasing our loan loss provisioning by 5 times, last year we did almost 2.5 times what was normally done. Despite that, we posted record earnings for the institution, and posted record returns in return of assets. Return on assets as of today is around 2.4%. 2.4%, and return on equity is around 33%. Those are very high numbers in terms of historic. We don't want to highlight that. We really do want to highlight what the bank was able to do in this challenging time, and the realities of being able to transfer this into the model that we're now following in terms of bancarization. For the bank, we have a new program called Bancarizar es Patria, which came out of those programs. We're focusing on bancarizing those customers that did not have access to the system, and it turned out to be a good thing. I think there are still challenges going on in terms of recuperation. I mean, the economy has been doing well. We're growing around almost 10% compared to the year 2019. Unemployment rate is coming down. We see more employment. On the programs, they're now from the government, really very little still stay there. We see employment high on the free trade zones, on the tourism area, in the small businesses as well. So we do believe that we have seen the peak of the effect. We now have learned how to deal with this. This is going to linger. We know it's going to linger for a while. But as a bank, we have incorporated into our score systems, new methodologies, and we call it COVID methodologies, COVID effects methodology, where we have customers that were affected by the COVID and will never recuperate. No, there are customers that were affected, but they are viable and with some assistance. There are customers that are affected for a period of time and will return. There are customers that were not affected. No, like for example, the tourism area. We have a portfolio for the tourism. As you know, we started that portfolio in 2015. It's a relatively young portfolio, new, 5 years of maturity. We're coming down to the repayment of this the first repayments of these facilities, no, and we have refinanced most of our entire loan portfolio for the tourism area, and they're all performing well. Here we have ample coverage. We finance only about 60% of the project, and we have seen an increase in the level of occupancy on the hotel now to up to 80% of what it was last year, 60% of 2019, and it is expected to have tourism close to 5.2 million tourists by the end of the year, according to the Ministry of Tourism. The bank has continued to support the tourism area. We have placed some facilities on new projects along with other banks, and that has been doing well for us as well. We're proud as a state-owned bank to have come back again and play our role on a crisis and be that bank for all Dominicans.
And Jose, I know that Banreservas has been focusing on digital innovation for a little while now. Can you just give me a couple of practical examples about how that paid off in the pandemic for the bank and also for your clients?
Sure, very well. Yes, Rob, Banreservas have been for the past few years focusing on increasing their digital strategy. During the pandemic, we were really tested on that. And for example, as we are an institution that receive a lot of customers and our clients that physically, we were challenged in terms to accelerate that strategy and implemented a self-assisted onboarding for our clients, as well as applications for our customers to receive, make appointments to come into the institution. As a result of that, over the past 12 months, our digital strategy have accelerated, and we are happy to tell you that over last month we inaugurated what is called a smart office, a dual service design smart office, where people can auto-serve and as well as to go to be served by a customer as well. Our app has been revamped as well for our customer, enabling our clients to do wire transfers and serve themselves there. We are refacing our app so that part of our services are not requiring data, and before signing they can get into the services for that. And we are enabling our customer to have a transaction for FX on our app in our mobile banking as well. It is an ongoing process. Banreservas has started that, and we are really getting into this mode. The pandemic forced us to this, and we're very ready. As you know, we changed our core banking system 4 years ago. It's very new, fairly new. It has a lot of versatility for that, and it allowed us to really add to our content digital services for our clients, enabling that to make us and become more efficient.
Excellent. Well, thank you very much for giving us some of that insight into what was an incredibly challenging year, but congratulations again on your performance. Thanks for taking the time today, and until next time, thank you, Jose.
Thank you. Bye.